Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, January 23, 2015. You're looking at a daily chart of the SPY, and I've been mentioning that today, between yesterday and today, should mark a daily cycle turn day, and since the market was up into that period of time, then it made sense. The probabilities were in our favor that the market would make a turn downward, and that's what happened today. So the cycle seems to be playing out, and again, a turn could be one day, a turn could be 2 to 4 days or more. There's no set amount of time that a turn will take once a daily turn period hits. It's just a matter of identifying a natural resistance point in the market and a turning point in the market. And on a daily turn, it does usually, on average, last 2 to 4 days. So that's about my experience with it on the turn days that I've been able to identify. 2 to 4 days is a reasonable average. So what that does is it takes us into, let's just say, middle of next week, if we get another down day or two or so of pullback in the market. Where would that take us? If that happens, the maximum downside that I see right now is right about the 201.50 level, okay, give or take 50 cents, okay? So I'm not going to try and pinpoint it to the penny. I'm saying 201.5, give or take 50 cents, okay? Basically what that'll be is somewhere between half and 3/4 of the retracement from this low here to yesterday's high. About half of that is about 201.75, give or take. And I'm not trying to pinpoint it exactly. I don't need to measure it out. I've already done the calculations. It's 201.50 plus or minus 50 cents. That's where I see the downward potential on this pullback. And depending on how we come there, if that marks a stopping point, then you could look for another rally to resume that should take us to new highs, to new recent highs. In fact, I think we will make new highs beyond this 209 area, but we'll have to see how long that takes. I'm not saying that's going to be in a couple of weeks, but it could be, because within the larger turn, okay, within the larger turn that occurred really last week down here, okay, this should be a multi-week rally. But within a multi-week rally, you get pullbacks. And remember, I've talked in the past, when we see corrections, sometimes it's an A, B, C correction. A, B pullback, C. Upward doesn't have to, a correction doesn't have to be downward. There is an upward correction from a down move, right? So we had a down move. Upward correction could be an A pattern, A move, B, and make a C pattern, A, B, C. A, B, C, and that could take us to new highs. We can get up to the 110 area, 109.50, 110, maybe higher. We'll have to see what happens, but let's see how we come into this level here, and if this does mark a stopping point, and if we do, and we can find a bottom here, the odds are in our favor that we're going to make a new high. Okay, let's, you know what, we'll also, even on today's down day, I want to make mention of the IWM. We always watch the IWM for confirmation or leading the market one way or the other. And what's interesting today was the IWM was more or less flat. It really wasn't down that much. It finished, finished down, I'm looking at another chart here. My IWM is down 25 cents, 0.21%. The S&P was down 0.5%, a little more than 0.5%. So basically, you know what, the IWM, over the last several days has been a little bit disconnected one way or the other. It's been both ways. So there's nothing we can take out of that. It's just something I like to notice. I like to look at the IWM because more often than not, it's going to give an indicator of what direction other markets are headed, meaning the S&P and the Dow. Usually makes a move first, but something this small, something like this, and all week long it's been diverging up and down, so we're not going to read anything into it. There's nothing we can take away from that. Okay, so let's go over to the gold market. We'll take a look at GLD, and the price of gold, we went into that 13, this is GLD, but price of gold futures we went into the 1300 to 1310 area. I think we made it up to about 1307 or '08, something like that, yesterday or the day before. And I said 1300 to 1310 was the second after we blew through the first level of 1240 to 1245. Once we blew through that, that was an or higher. Then I said, well, the or higher is going to take us to 1300 to 1310. Then we should see a pullback from there, and maybe we're starting to see the beginnings of that pullback because we were down at about 1287 or 88, I think, on the price of gold futures, and we were down here in the GLD today. So we should see another few days of downward movement in gold, but there's always a but. Higher prices are ahead. The bigger picture is that we're going to see higher prices in the price of gold in 2015 for sure. I don't expect this pullback to come much beneath this 200-period moving average, if at all. Maybe to this gap window here. Here's a pivot high. I talked about this last night. This is like prime real estate right here for a bounce. So I would love it if we got down into this 120 and a half area on the price of GLD. That's a buy signal, so you can write that one in your notebook. I'm going to keep that one also, and the members will get that when we get there, depending on how we get there. As long as the setup is right, looks like a good trade could be had. Okay. So I talked about gold, talked about IWM, talked about the market. We have Greek elections. Yeah, here's the deal. There's Greek elections on Sunday, and the elections are going to determine most likely whether or not the Greece stays in the euro. And it's just a cycle of stuff, right? And it's really not important. It's really the big picture is it's not important to the world. Greece just doesn't import or export that much where it's important to the world. I'm fine with Greece. It's not the point. I'm just saying from an economic perspective, it's not the end of the world whether they stay or go from the euro. But what happens is the emotions take over, the media takes over, and whatever the market direction becomes on Monday, for example, that will be because of what happened in the Greek elections, regardless of which way the elections go. I don't even care which way they go. All I'm saying is, whichever way the market goes on Monday, the Greek elections will be the convenient excuse if they need it, for example, if it's on the downside. Okay, if the market goes up on Monday, they may or may not mention Greece. It might not matter. Depending on who's elected, it doesn't make any difference. And when the market's up, nobody cares about anything, right? But if the market's down and they need a convenient excuse, they can tag on Greece to whatever the reason was for today's sell-off. And as we know, the reason was because the cycle was due for a turn, and that's why the market turned. But all that other stuff is for the masses, and it's for the talking heads, and we'll let them keep talking. You know what, folks? I think I'm going to keep it short tonight, short and sweet. I'm going to give it a wrap, and we'll just go have a great weekend, and we'll get back on the charts next week starting on Monday. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.